Alright, hi everyone. Welcome to today's live analysis brought to you by IC Markets. Alright, just want to make sure, okay, we're streaming directly to YouTube, right? So do take note of the live chat window that we have going on. So please drop all your requests and any questions that you may have in this window. I just want to make sure all of you can hear me and see me, hear me loud and clear, and see my presentation slide as well or screen. It should be showing IC Markets Webinar Live Analysis Session 21st August. Alright, hi HMH, good to see you as well. Right, thank you. Alright, okay. Alright, let's get, I think, yeah, we got people starting to tune in as well. Alright, okay, let's just kick things off. And of course, we'll start with a disclaimer. Alright, thank you HMH. Great, okay. So audio, visual is all good. So let's just continue. Alright, okay. As of course, do take note that this is marketing communication. This webinar series is a marketing communication. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Past performance is not a guarantee of or prediction of future performance. The analysis contained herein does not constitute a personal recommendation and does not consider your personal investment objectives, investment strategies, financial situations, or needs. Okay, and also do take note of the risk warning that comes with trading Forex and CFDs. Right, trading Forex and CFDs carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Trading Forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risks involved and seek independent advice if necessary. Alright, hi Manaya, good to see you as well. Alright, welcome in. Great to see all of you tuning in. Alright, okay. Right, sorry. Okay, so my name is Ketan Rameshchandra. I'm an investment analyst here at Everest Fortune Group, where Everest Fortune Group has been the finalist for Best FX and Equity Research for the following years, 2019, 2020, and 2021. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group. Alright, here are some of the key economic events to take note of this week. Alright, okay, so do take note, we have a barrage of flash PMIs coming out tomorrow on Wednesday, 23rd of August, mostly from the Eurozone as well as from the US. And then we have unemployment claims again, the weekly unemployment claims coming out on Thursday, 24th of August. And this weekend is a pretty big event going on, which is the Jackson Hole Symposium, which is going to be held in Wyoming, USA. So this is a 3-day event which starts on Thursday, 24th August, and ends on a Saturday, the 26th. So on this, during this event, you're going to have central bankers and other finance ministers from all the major economies convening down in Wyoming, America, where they'll be conducting meetings behind closed doors, but they will be interacting with members of the press throughout most of the day, where they may touch on topics such as unemployment, employment, inflation, as well as monetary policy. And because this symposium ends or concludes on a Saturday, US time in the evening, so there could be a risk of, or there could be a weekend news risk when markets reopen on the following Sunday, right? So Sunday evening, 8 p.m. GMT on the 27th of August when markets reopen, there is a potential risk of some weekend news that could have occurred during this meeting. All right. Okay. So let's quickly move on over to Forex Factory, right? Okay, so on Forex Factory, I'm on GMT time and I'm showing just the key economic events to look out for this week. Okay, so tomorrow we have existing home sales and some retail sales. Okay, retail sales will probably be a bit important for the Kiwi or New Zealand dollar, US dollar. The retail sales have been declining over the last 2 quarters, but the current estimate shows the most or the least the most shallow decline. So should the actual reading come in close to this, or maybe even doesn't print as negative or comes in flat, this could provide some short-term buying relief to the Kiwi dollar. Okay, but on Wednesday, 23rd August, we have flash PMI data coming out, which is going to give us insights into the manufacturing sector and services sector for France, Germany, and of course the Eurozone. And we also have PMI data for the US coming out later at 1:45 p.m. We also have retail sales in Canada, and then on Thursday we have the unemployment claims coming in on a weekly basis. Just to get some context behind unemployment claims, they are basically it tracks the number of Americans who file for unemployment benefits. Right, it's a weekly data point that's released. So if the figure comes in higher than the forecast, that means that more people are claiming for unemployment benefits, which would mean the labor market is starting to show some cracks, and that potentially means uh, that means that the Federal Reserve may not be as hawkish going forward, and that generally acts as a uh, bearish catalyst for the US dollar. But if the actual figure comes in lower than the forecast, that means there are less people filing for unemployment benefits. That means the labor market is still resilient, is robust. So that means this acts as a bullish catalyst, a potential bullish catalyst for the dollar index. So that's how we can interpret this data point. And as we can see over the last few weeks, the data has been pretty mixed. Like in mid-July, the data was actually coming in lower than the forecast. So that means the dollar was gaining strength over the last few weeks, as we've seen. But last 2 weeks ago, the data came in much higher than the forecast, which should have which should have acted as a potential bearish catalyst for the dollar index. But because inflation, CPI and PPI data in the US actually came in higher for the month of July, so that actually offset this reading. And last week's reading was came in slightly below the estimate, which also acted as a bullish catalyst. So do take note of how we can interpret the unemployment claims data and how it impacts the dollar index, and of course the forex majors and gold prices as well. And then, okay, as we mentioned, we have the Jackson Hole Symposium that starts on August 24th, and of course we also have the German IFO Business Climate on Friday. All right, okay. And for those who may have missed the pre-market analysis with Desmond this morning, right? This is the link here where you can go. I'm going to include it in the chat window so you can watch this video after this live analysis session. Should you have missed this earlier this morning? All right, okay. So let's dive straight into trading view, and here I am on the chart for the dollar index. I'm currently on the daily time frame, so these are some of the levels that you may have seen earlier this morning. Right, so we'll just start off with the daily time frame and then zoom in into the 4-hour time frame to identify the more actionable support and resistance levels for the next 1 or 2 days. All right, okay. And of course, if you have any questions or requests for analysis for any currency pairs or commodity or even the indices, please do not hesitate to type it into to ask in the live chat window. All right, okay. So you can see since mid-July, the dollar index has been rising very strongly. Right, it's a combination of strong employment data in terms of NFPs, in terms of lower unemployment claims, and also falling CPI data in June and July. But because of not falling CPI, but rather stronger employment data. So basically, stronger employment data has been pushing the dollar index higher. And also from a technical point of view, like we have the key level at 100 and price bounced off 99.50. We can also see a key technical reversal take place of a key support level at 100. As you can see, when the dollar selling off quite sharply for most parts of July, and of course as traders close out their short positions, they have to buy it back, so that results. That's what we call short covering, traders covering their short positions, which is called short covering, which in a way drives up the price of that security as well, or in this case, this index. So combine that with stronger employment data, we've seen the dollar index climb above 100, going and breaking above 103 last week. And also last 2 weeks ago, we had US inflation data which showed CPI and PPI data for the month of July going higher, which then which caused bond yields to go higher as well, which means that dollar index pushed and touched about 103.55. But we see price is currently trading at a very significant resistance level, and as we speak, the dollar index has been retreating for most parts of today. Okay, so this is where we are on the dollar index chart, and of course, let's just quickly look at the euro. So naturally, the euro has been falling as well, going under 1.09, and it's found this nice support level here and bounced off this level. Similarly, pound also has fallen, but not as much as the euro, because last week we had inflation data out of the UK as well, which showed inflation to be both headline inflation and core inflation to be relatively sticky, and also coming in higher than the estimates, which provided some short-term relief, short-term bounce to the pound. And of course, dollar yen has also been moving higher, but after hitting 146.50, it's actually started to retreat on last Thursday and Friday before finding support this morning. Right, and naturally, if you look at gold, gold has been in a downtrend as well since mid-July, breaking under the $1,900 level, and it does seem to have found support around 1885, but it does point to further declines. All right, okay. Now let's go back to the dollar index. This is the daily chart. Right. Let's just zoom into the 4-hour time frame and try and identify more actionable support and resistance levels. All right, okay. So in terms of the first resistance, I think this is fine. We can use the daily, the resistance that was identified on the daily time frame, and we can keep that for the 4-hourly time frame. Right, I can also see we have a nice uptrend here. Let's see if any trend lines were broken. Right, we can see from this swing low going up. Okay, so far, right, there's a nice ascending trend line for the dollar index. You can see price bouncing off this level on 27th of July, then once again on 10th of August. And as we speak, price is currently falling towards this level. Okay, we can also do a Fibonacci retracement. We can start from this swing low here on the 18th of July and ending with the swing high last week, Friday, 18th of August. Let's pull up all the fibs and see what we get. Okay, at where the 23.6% Fibonacci retracement lies, we see a nice overlap level as well here, right, where price ran into resistance 3rd August, 8th of August before finally breaking higher, and you can sort of argue that price found support above this level on the 14th of August and as well as 15th of August. So I think on the 4-hour time frame, you can identify this level here. Oh, and if I go back as far as here, right, we can also see price found support at 102.86 back at the end of June and early July as well. So we see a very nice overlap here, which is a strong overlap with that aligns close to the 23.6% Fibonacci retracement. So this is how we've identified the first support level, and I shall just highlight this zone as well in green, just to show that this support level at 102.86 is a strong overlap support that's also supported by the 23.6% Fibonacci retracement level. And we also have the ascending trend line. So should price break through this ascending trend line that we see here, it's quite likely that it's going to continue to fall and eventually find support at where this first support level is, or the zone rather, right? So between 102.70 and 102.86 or 85 is where we should find some serious support for the dollar index should this ascending trend line be broken. All right. Now what about the second support? Okay. For the second support, I see a nice overlap here as well. Right, we don't have to go back so far, but just here. Right, so this level at 101.97, you can see price making a significant swing here back in on 22nd of June before finally breaking lower. Then running into resistance on 28th of July, finding support here 1st August as well as 6th August and as recently as 10th August as well. So multiple instances where price has bounced off this level as a support and also as a little bit of a resistance. Okay, so for the 4-hour time frame, I'm going to keep we've identified the first and second support level, so let's just get rid of this first support level here that was identified on the daily time frame. We don't need that for this analysis. And with regards to the Fibonacci retracements, we'll just keep 23 and 38%. Right, so we've tidied up the chart a bit, looks more clearer. Right, okay, what about the resistance levels? Okay, as we mentioned, the first resistance was identified on the daily time frame, and I think we can still use that for now. That's still applicable, but I think I would also just like to highlight this area here, the swing high here that was formed, and you can see yep, as far excuse me. So we have a zone here. I just want to highlight this zone. Right, so between 103.44 and 103.60 we have the first resistance zone, right? And what about the second resistance? Of course, the second resistance is identified on the daily time frame. That's simply too high. Can we use anything else? This is a 127 Fibonacci extension. This is a good level for the daily time frame, but what about for the 4-hour time frame? Is there any other level that we can use? Um, zoom out a little bit. No, everything's any nice overlaps. Potentially, I would argue probably yes, this level here at 103.94. We can use that to identify our second resistance on the 4-hour time frame. Right, so we see a nice overlap here where price has bounced off this level several times, acting as a nice strong overlap resistance. Back then it was support, but now it will act as resistance. Okay, so for the 4-hour time frame, these are the immediate, more actionable support and resistance levels. And let's just tidy up the chart by removing this zone here and the second resistance, as well as this 127% Fibonacci extension as well. Okay, just to recap, this is the dollar index. We have on the 4-hour time frame, we've identified the second the resistance and support levels based on a combination of overlaps, significant overlap levels, as well as using the 23 and 38.2% Fibonacci retracement levels. Okay, right. Okay, so this is dollar index. Let me see if there's anything else that I should highlight here. What about the cloud? Okay, price is okay. We have the Ichimoku cloud. Price is sorry, excuse me. Pardon me. Okay, price is still trading above the cloud, which suggests a potential bullish support as well. So as we see, the zone that we've identified as the first support level also coincides or aligns pretty well with the bullish Ichimoku cloud. So if price does break through the ascending trend line, it's quite likely to find support around here before potentially maybe just bouncing off this level as well, right? It's very likely we're going to find very strong support for the dollar index between 102.70 and 102.86. All right, okay, let's move on to the euro. Okay, so we can see, right, the euros is trading under the bearish Ichimoku cloud and is pushing higher today. Naturally, if dollar index is falling, the euro and pound are going to rise. Okay, so let's find more actionable levels for these pairs. All right, okay, I will just, okay, we know it's trading under the cloud, that's fine. So, okay, let's just keep the cloud, but I'll get rid of the other drawings and let's just start with a clean slate. So it's easier for us to try and identify more actionable resistance and support levels. Okay, first off, I'm going to use the Fibonacci retracement tool, starting with the swing high here on 10th of August, going down to the swing low on 18th of August. Let's pull up all the fibs. Okay, so in terms of first support, I think it's quite pretty obvious that the first support here at this level, 1.0838, we can see a nice strong overlap level here as well. Price bouncing off here on 30th of June as well as on 6th of July, and coming close to this level last week as well. So I think the first support is pretty obvious, right? You can see a nice overlap here. What about the second support level? How are we going to identify this? Okay, let me do a Fibonacci retracement here. I'm trying to go to use the 127 extension, but that's just simply too far, so we're not going to use that. Anything else? Perhaps we can use a Fibonacci extension. Let's go down here and see whether we can find anything. Okay, this extension, where I've run this extension, is probably not the most ideal extension, but the trend line does capture the price structure pretty well on both sides of the downside and upside. So we're using the, okay, let's pull up all the projection levels first. Okay, so we can see the 61.8% Fibonacci projection level lined up pretty well with the overlap support where price has bounced off last week. And we can see 78.6% is down here. So let's just keep 61 and 78.6%. These are Fibonacci projection levels. Right, and right, you can see a pretty decent overlap around this level as well. If I look back here, you can see price running into resistance on the 2nd of June as well as 8th of June, and also finding a little bit of support on 14th of June. So I think this level here at 1.0779, it's a pretty decent overlap support that aligns with the 78.6% Fibonacci retracement. So that's where we've identified the second support level. Okay, now with regards to the Fibonacci retracement that we did here, which retracement, let's see if we can use any of the retracement levels to identify potential resistance as well as looking for overlaps. Okay, actually if we zoom in here, we can see this level at 1.0926 as a pretty decent resistance level that also aligns close to the 38.2 Fibonacci retracement. We see a strong overlap here, and if I were to go back as far as 30th of June, we can see that this level at 1.0924 has acted as resistance in the past, support in August, and also running into resistance as well in middle of August. So we can see multiple instances where price has bounced off 1.0924 as a resistance and support. So I think this is a good overlap resistance to identify on the 4-hour time frame that aligns close to the 38.2% Fibonacci retracement as well. Okay, now what about the second resistance? How are we going to try and identify that? Let's see any strong overlaps. Okay, we don't really have the very ideal positions, but I think something close to where the 61.8% Fibonacci retracement level is, we could identify something around there. Yes, probably just above this. We can see we can use this pullback as the second resistance levels, because we can see price running into resistance here on 9th of August as well as breaking above here on 11th August, and we can see price finding support at close to this level back in July as well. This is not a very significant swing, but we do see price pulling back here before reversing to climb much higher. Right, so I think we'll use 38.2% and 61.8% Fibonacci retracement levels to help us further justify the resistance levels. So let's just tidy up the levels and choose 38 and 61. Adjust the labels as well to make it a bit more clearer. Let's see which is better. Okay, I think probably this is a little bit better. Okay, so as we can see, of course, with dollar index falling, the euro is definitely going to be rising, and it's going to run into most likely serious resistance at 1.0924, and price is still trading under the bearish Ichimoku cloud. So we have the cloud as well, adding as a second factor contributing to significant resistance zone. So do take note, the euro could run as it's rising up today. It's quite likely to run into some resistance at about 1.0925. Okay, so we've used the Fibonacci projection, as you can see, the 61 and 78.6 Fibonacci projection levels to help us identify the first and second support levels, which are also strong overlap levels, while we are using the Fibonacci retracement here on this part of the move, and we're using 38.2% and 61.8% retracement levels to help us uh, add more significance to the overlap levels that we've identified at 1.0924 and 1.0999. All right. Okay, let's all move on over to the pound. Right, similarly, as I said, the pound has held up a little bit better compared to the euro due to the stronger inflation data out of the UK last week. Price is currently trading above the Ichimoku cloud, and the cloud suggests a further bullish movement. So we can see that on the 4-hour time frame, how the pound is relatively stronger than has held up relatively better than the euro and the other majors. All right, so let's try and identify more actionable levels on a 4-hour time frame. Okay, so we'll just get rid of uh, the levels that were identified on a daily time frame. Okay, we can do. I'm going to use. Okay, first off, I'll do a Fibonacci retracement from this swing low here on the 14th of August going up to the swing high on 17th of August. Let's pull up all the fibs and zoom in a little. All right, I think in terms of first support, I think something with, let me see, somewhere a bit closer to where price is currently trading. Yeah, I think we can see these pullback levels here at 1.26 or basically 1.27. You can see price bouncing off this level several times here, back on 4th of August, 8th of August. After price broke through, it came up again, finding support on 16, 15, 16 August as well as 17th and 18 August as well. Right, so you can see multiple instances where price has bounced off this level. So this is a pretty strong overlap that also aligns with the 50% Fibonacci retracement level. All right, with regard to the second support, you can see that price has made some sort of a double bottom here, close to where the 78.6% Fibonacci retracement is. So I'll just use this level as the second support. Right, so we're using the 50% and 78% Fibonacci retracement levels to add as additional factors that contribute to the significance of these two overlap levels. All right, so let's just tidy up the fibs. We're using 50 and 78. Right, okay. And maybe I'll put this labeling at the bottom so it's clearer. Yeah, a little bit better. Okay. What about the resistance? Okay, without doing any Fibonacci resistance levels, I do see a very nice overlap. Right, if you look here, starting uh, as far back as 28th of July, this level at 1.2778 has acted as a strong support level at the end of July before acting as a strong resistance levels multiple times. So this is a very good strong overlap level at 1.2779 that we can use to identify the first resistance. All right, hi Tijani, welcome. Thanks for joining us. All right, hi Jamilu, good to see you as well. All right, thanks everyone for tuning in. Okay, so first resistance is identified by this strong overlap level here. What about the second resistance? How are we going to try and identify that? Okay, let me see. We do see, I think I can use a projection as well. We're going to start with the swing low on 14th of August, going to the swing high on 17th August, ending here. So we have some, let's pull up all the fibs. So 61.8 is where lies quite close to where the first resistance is, so we can keep 61.8% Fibonacci projection as a guide. And I think the second 100% projection is where we can probably set second resistance here. And there's no other major strong overlap, but we can see price ran into resistance here. It's sort of like a pullback resistance back in the end of July. Price didn't really break above it and then proceeded to drop lower. So this level here, which aligns close to where the 100% Fibonacci projection is, we can use that as a second in the identification of the second resistance. Alright, and we'll get rid of 78.6 as well. Alright, okay, so this is the pound dollar. Price is currently trading above the bearish Ichimoku cloud, and it's quite likely it's going to make a push towards the first resistance at 1.2779, right? Which is an overlap resistance. That's also aligns close to the 61.8% Fibonacci projection level, and the first support and second support levels are also significant overlap supports that align with the 50% and 78.6% Fibonacci retracement levels. Okay, let's move on to dollar yen. All right, okay, let's just clean up everything again. As you can see, price is dollar yen after making sort of like a double bottom in mid-July and end of July, has bounced quite strongly to break above 146, going as high as 146.55. Price currently pulled back on last Thursday and Friday, but found support at the strong overlap level here, right? That's identified on the daily time frame, which is also applicable for the 4-hour time frame, right? So I'll just keep the first support. I'll get rid of second support because that's a bit too far for the 4-hour analysis. First resistance as well. Maybe I'll just keep it as a potential second resistance, but it may be still too far for this. I think it's fine. I think for the second resistance, I think that's probably an okay level. And of course, the first resistance level. Can I zoom in? Is there any overlaps that I can use? No, I think it'll be just sufficient enough to use the recent swing high as the first resistance for dollar yen. Right, and also there's also Elliott wave analysis done here. As you can see, Elliott wave, the first wave started from here, 13th of Jan, going up, and then the second wave ended here on 27th of March. We had the third wave which ended on 30th of June, and the fourth wave ending on 14th of July. The fifth wave is projected to end at 148.10, and we've also used the Fibonacci projection level as well to help us to add a second factor in the identification of the second resistance. All right, okay, so let's just zoom in a little bit. Okay, so we know where our first resistance and second resistance levels are. First support is also straightforward, identified on the daily time frame. Now, what about the second resistance or second support? Right, without doing any Fibonacci retracements as well, I see a nice overlap here. And you can see price running into resistance at 143.83 a couple of times, and also finding support. So I think this is a pretty decent level to identify as the second support. Right, so we can see price running into resistance 23rd of June, finding a bit of support 27th June, and again on 6th July before finally breaking lower, and finally making another significant swing here, running into resistance on 3rd of August, and eventually breaking through on the 10th of August. And we can also see that the first support lies just above the Ichimoku cloud. Second support is within the cloud, so we've got the cloud supporting as well. What about hi Tijani. Oh no, see, because of time constraints, it's simply not possible for me to go through every single currency pair or commodity or indices. I'll just go through like some of the major ones. And should you have any requests for any particular pair, do drop your questions or requests in the chat box, and I'll be happy to go through the analysis with you. Right? Within given the 1 hour time period, is simply not possible to go through every single pair. So I usually go through most of the majors, and I'll cover gold and oil as well. But of course, if there are any requests for any of the majors or any of the minors as well, or the crosses as well, yeah, do feel free. Do not hesitate to drop your questions or requests in the chat box, and I'll be happy to go through the analysis with you. All right. Okay. Yeah. So this is not a sequential order. I'm not going to. We simply do not have that time to go through every single currency pair or commodity or even the indices, but we usually touch on the most of the majors, touch on one or two commodities, and perhaps the indices as well, and of course the crosses should there be any requests. All right. So I'll just try and quickly end up with dollar yen. Okay, where was I? Sorry. Okay, let's see. Are there any trend lines? Is there any trend line from this swing low here? No, not really. There's no real trend line. Nope, nothing in terms of a trend. No, there is. Right. Fibonacci. Can we use any Fibonacci retracements to help us identify any support levels? Let's see if I go from here. This is not. No. Okay. One thing about Fibonacci retracement, the trend line that you see here should capture the price structure or the market structure pretty well. So in this instance, although the trend line captures this part of the move very well, we can see here that in the end of July and early August, the trend, because the price moved up pretty high, the trend line is not capturing this part really well. I personally wouldn't use the Fibonacci retracement here because I don't think this is a very good starting point. So for this instance, I would use the starting point on the 6th of August and end with the swing high on 16th of August, where we can see the trend line capturing the price structure very well. Right, okay, so let's pull up all the Fibonacci retracement. All right, so okay, Tijani, I assume you want me to cover Swiss franc. Okay, so I'll cover that. Yeah, like I said, I'm not skipping anything because we simply don't have enough time to cover. But should you have a request, do let me know. But I assume now you want me to cover Swiss franc. Okay, and I'll do that after dollar yen. Okay, so as we can see, 23% Fibonacci retracement is here, 38 is here, 50 is here. So the 50% lines up pretty well with the second support level. So we'll just keep 50. Right. Okay. And maybe can we do a Fibonacci projection? I'm not too sure. Maybe this projection is not pull back. Okay, we can use. Okay, so I've used the Fibonacci projection starting from the swing low here, 7 August, going up to the swing high here, and ending with the swing low. So we are going to use the 61.8% Fibonacci projection, which lines up pretty well with the other projection level as well. So we have two Fibonacci projection levels aligning close to each other at 148.10. So we call this a Fibonacci confluence, or simply a level where there's more than one Fibonacci retracement, projection, or any combination of the levels at a particular price point. All right. Okay. Let's look at dollar franc. Oh, sorry. Dollar franc. Okay, so let's just start with the daily time frame. Okay, so as you can see on the daily time frame, we can see dollar franc has been trading within a bearish channel, and over the last few weeks, it has bounced very strongly. Of course, if dollar index is rising, the dollar franc is also rising, but we can see that price is now approaching a combination, a pretty strong resistance zone, which is a combination of the bearish Ichimoku cloud, also a strong overlap resistance, as well as the upper channel of the bearish trend line as well. So we have a few factors that highlight this as a very significant, as a potentially a very significant resistance area or zone. And you can see price currently pulling back today. Okay, so here I am, right? Here we are on dollar franc, and I'm going to zoom in onto the 4-hour time frame now to find more actionable levels. Okay, with regards to first resistance, I think that's not an issue. First resistance is applicable for the 4-hour time frame as well, which is at 88.19. And on the 4-hour time frame, you can see that price is trading above the Ichimoku cloud. Alright, so let's try and find any more actionable support levels. Again, if I do a Fibonacci retracement here, it's not ideal. The trend line doesn't capture the price structure very well, so that's not a good way to do it. Here, even here, it's not a really good level as well. Okay, so generally, because of the price structure, we don't have any really decent swing highs and lows to use to help us identify or use the Fibonacci retracement. So let's not use the retracement at all. Maybe we can use perhaps a projection. Yeah, let's see, maybe something like a projection is more useful here. Let's start with the swing high on 17 August, going down a swing low here, 17, and ending with a swing low. It's a very small projection. This swing is not, they're not really huge swings, so let's see if we can use them to identify any potential support levels. I think we're just going to use price action and the overlap levels to identify the first support. Right, okay, so we can see here this level at 87.69. We see price forming a pretty significant bounce here that occurred on the 17th and 18th of August. 17th and 18th of August. So I think we can use this level in the identification of our first support, which is 87.69. And for the second support, you can see the price structure is not very clean. It's actually pretty choppy. You could argue that dollar franc has been ranging between 87.20 and 87.90 for most parts of August before finally breaking higher. But as you can see, there's a major resistance at this level is pulling back. And we can also see that this price level is also where the bullish Ichimoku cloud lies. So we have a second supporting factor to add to the significance of this level. And in terms of the second support, again, it's pretty difficult to find anything here. Right, okay, maybe I'll do a Fibonacci retracement from here. And let's pull up all the fibs. Right, okay, 78.6 is here, 127 is here. Alright, so I'm going to use 127, 161 and add 78 as well. Right, so in terms of the second support, this swing here that we can see and that occurred on 10th of August aligns well with the 161 Fibonacci extension level as well. I think this is a good level to identify as the second support. Okay, so I'm just going to get rid of 127 and tidy up the labelings as well. Alright, okay, so this is some of the more actionable levels for the dollar franc on a 4-hour time frame. First support is at 87.69. Second support is at 87.18. We also have the cloud, the bullish Ichimoku cloud close to where the first support overlap of swing pullback is, and price is currently falling towards this level. First resistance is at 88.19. Alright, okay, welcome Tijani. Alright, now let's move on over to gold. Right, so naturally, if dollar index has been rising strongly over the last few weeks because of the negative correlation that the US dollar has with gold. So if US dollar is rising, that means dollar index is also rising. Naturally, the gold prices are falling, as we can clearly see here since 20th of July. You could argue gold has made a sort of a double top here before dropping under $1,900 per ounce, and is finding support at where the 61.8% Fibonacci projection level is. So this projection level was identified by starting with this swing high here on the 4th of May, going down to the swing low here on 29th of June, and ending with the swing high here on this 20th of July. Right, 30th of June, yeah. So we have a 61.8% Fibonacci projection level helping us to identify the first support. And if we zoom out, this overlap is also a pretty key overlap as well. We can see price finding support here on end of February. Again, yes, 25th February, 28th February, find it acting as resistance after that. So we can see multiple instances where this price has, this level has acted as uh, major support or resistance. And combining that with the 61.8% Fibonacci projection, we are using this zone as our first support zone. And if the dollar index is falling naturally, right, we can expect gold prices to be to be at least supported around. Gold has been very weak, so we could expect gold to probably retrace higher before maybe resuming the downtrend. All right, okay. In terms of resistance, something that's more actionable in terms of first resistance levels, we can use this. This was identified as intermediate resistance on the daily time frame. We can now use this as the first resistance level, which is at 1935. And this first resistance on the daily time frame now becomes our second resistance for the 4-hour time frame, right? Okay. Uh, what about the second support? What can we use? Let's do a Fibonacci retracement here and use 127 and 161. Okay, 127 extension is here, but we don't really see any nice overlap levels. I think the next support level I would use for gold would be at this level here at 1856. We can see pretty significant swing here. Price running into resistance on mid of June, and again finding resistance here on the June. Oh, sorry, this is June of last year. Yep, finding resistance in June of last year, and then finding resistance in March earlier this year as well. So you can see this level is pretty significant as well. So we'll use this 1856 in the identification of the second support on the 4-hour time frame. So let's get rid of this, and we'll just keep 127 as well, just to show us where the extension level lies. So this would be our second support zone for gold. All right, okay. Let's see, is there anything else we can use? Maybe let's see, there's a Fibonacci retracement we can use here. Okay, we can use the 78.6% Fibonacci retracement. This is pretty decent, as we can see. The trend line capturing the price structure pretty well. Is not the best, as you can see, price has pulled back here, but generally price is trading pretty close to the trend line on either side. So I think this is still somewhat acceptable, and that's why we can use the 78.6% Fibonacci retracement to add as a supporting factor to the overlap at 1856. All right, so I think gold prices should be supported fairly well in the next few hours, right, with dollar index falling. So they may provide some opportunity in the future should gold retrace higher, maybe to where this first resistance was, first support here. Probably we could identify this level here. To me, this level here looks like a pretty decent intermediate resistance level. So should price retrace, bounce off the support level and come close to this intermediate resistance here, which is at 1900, potentially this could be an area where gold prices run into resistance and may reverse off this level to continue the downtrend. All right, so this is for gold. Let's quickly look at crude oil prices, WTI. All right, okay, we're coming close to the end of today's session. So if you have any requests, please drop them in the comment in the chat box right now, so that I'll have time to quickly go through it. So I'll have time to go through it with you after we cover oil. All right. If you would like to look at any of the crosses or the indices, please do let me know, and I'll be happy to go through the analysis with you. Otherwise, most likely we're going to conclude with oil. Okay, right. So since US 30, Samuel, all right, sure. Okay, we'll round off with US 30, which is Dow Jones. Okay, so as you can see, since the end of June and early August, most months of August, Crude oil has risen very strongly, right? It respected the ascending trend line a few times, but it finally broke through it last week. But however, price found support here at above just above 78.60 and is bouncing higher today. Right. So first of all, okay, in terms of the first resistance that was identified on a daily time frame, I think that's fine. We can still use that as the first resistance. But I like to highlight the zone, right? So we can see this zone here between 82.73 and 84.20. This would be the first resistance zone. And then, okay, we can also do a Fibonacci retracement, right? We've used a 61.8% Fibonacci retracement to help us identify the first support on a daily time frame. But let's look for more actionable levels. Okay, but before doing that, I see a very nice overlap here as well. At 78.72, we can see price finding support here on 2nd August as well as 16 August, and running into a little bit of resistance here on 24th of April as well. So this overlap level here, I find it as a very strong support or significant support level, right? And what about the second support level? Something that's a bit more actionable. Okay, maybe now we can use the Fibonacci retracement to help us identify this. Okay, let's pull up all the fibs. Okay, 38 is here, 50 is here. Now, in terms of retracements, I don't think any of the other levels. Okay, I think this price here at 76.94, we can see a pretty decent overlap level here as well. Right, I think we can use this to identify the second support. So let's get rid of this here. These are supports for the daily time frames. So do keep in mind that these are the support of daily time frames, and just keep them as a mental note. But today's analysis is covering on the 4-hour time frame. All right. So naturally, we will just keep no, none of the Fibonacci levels actually align pretty well. So okay, there's no need for any Fibonacci retracements. Let's see, what can we do here? What else? Okay, we can also do a Fibonacci retracement from this swing high here, going down to the swing low. Let's see, right? Okay, the first resistance aligns pretty well with the 78.6%, so let's just keep that as well. Right, okay, so you can see on this Fibonacci retracement, 78.6%, the level at 78.6% aligns pretty well with the with this significant overlap level here. First support level is this is at 78.92, which you also see a significant support level, and the second support at 76.90 is also a pretty decent pullback support level as well. And we also have the price currently still trading above the Ichimoku cloud, although price has broken under this ascending trend line, but price does continue to trade above the cloud, which does suggest potential bullish momentum for crude oil prices, or in particular WTI. Okay, right, so this is WTI. Let's move on to US 30. Alright, so on my on TradingView here, we're using DJ30, which is Dow Jones 30. Alright, so let's just, oh sorry, I was on the 4, did I do, okay, hang on, so 4-hour time frame. Apologies, I completely forgot. Alright, okay, let's see, can I do, no, it's still the same. Alright, okay, so sorry, this is now I'm on the 4-hour time frame for WTI. Okay, no changes to the support and resistance levels, as you can see. Clearly, there's strong, significant overlaps here at 76.90 and 78.92. And the first resistance is between 82.72 and about 84. Okay, let's go on to Dow Jones. Right, okay, obviously trading below the cloud. We still do have bearish momentum. You can also see a relatively decent trend line here. Right, price sort of breaking through. Right, so we had this descending trend line where price has broken through today, right? And it could find support around here. Okay, so let's try and find more actionable levels. Of course, this first resistance on the daily time frame is just simply too high. Let's try and identify something that's a little bit more closer. Maybe we can use a Fibonacci retracement from this swing high here. Okay, we zoom out a little bit. No, there's no really nice overlaps. Okay, I guess you could argue when we have this nice overlap level here where price ran into resistance back in the end of December 2022. I think we can use this potentially as a identification of the first resistance, which also aligns pretty well with the 38.2% Fibonacci retracement level. And as we can see in the current candle, price does seem to be running into seems to be stalling around this level, which is at 34,600, right? Stalling around here and starting to pull back. Okay, what about the second resistance? Okay, we see a nice pullback level here that sits slightly above the 61.8% Fibonacci retracement. So I think for the second resistance, I would use this level here at 35,067. We see multiple instances where price has bounced off this level and it sits slightly above the 61.8% Fibonacci retracement. Okay, so let's just get up this here, and we'll for this retracement we'll keep 61 and 38. All right, hi Raja. Do we do videos on fundamentals news releases? There are weekly videos coming up. Also, like last week or 2 weeks ago, we had a webinar on trading interest rate decisions. If you go onto YouTube and look for IC Markets trading the news interest rate decisions, you can find that video and you'll be able to watch it on YouTube. And tomorrow as well, we have another trading the news webinar coming up, and this time we'll be touching on non-farm payrolls or NFPs. So do look out for that. That's tomorrow at the same time as this webinar, right? So this was at what is this? 17 9:30 a.m. Yeah, 9:30 a.m. GMT. So do look out for that. So tomorrow 9:30 a.m. GMT, we will have trading the news, NFPs as well. So we do look out for that and do register for that event as well tomorrow. All right. Okay. So Dow Jones. Let's get back to Dow Jones. Okay. So first resistance, second resistance levels identified pretty well. And what else here? Okay, let me see. All right, Raja. Sorry. Okay. This is the link for the webinar that we had recently last week, I believe, which was trading the news interest rate decision. So you can catch that after this webinar, and do look out for tomorrow's webinar, which will cover NFPs. All right. Okay. So let's come back to where we are, Dow Jones, and we'll round off with this. Okay, so first resistance, second resistance is pretty straightforward. We also see price broke through a previously descending trend line, and now it's running into resistance here. Okay, what about second support? I think no issues for the first support. This is fine. Second support, great. Maybe, okay, what's this Fibonacci retracement? Okay, we've done the Fibonacci retracement here. Basically, just to tidy things up, it started from this swing low here on 10th of July, ending with the swing high here on 27th July. We have this other Fibonacci retracement which we don't need for the 4-hour analysis. Okay, I think because there's no other major significant support or overlaps. I think for the second support for Dow Jones, we will just simply have to use the 78.6% Fibonacci retracement level here, right? And we can see the 61.8% Fibonacci retracement finding support somewhere around here before bouncing higher. All right. But do take note, because price has broken through this 61.8% Fibonacci retracement, to me, yeah, this level no longer holds a major significance. So the real support would come in at 34,366. So in this case, I'm just going to keep it simple and just keep 78.6%. Right. Okay. So this is what we have on DJ30 or US30. Right. Equity markets have been pulling back last week as well for most parts, or rather the second half of last week, or most parts rather, right? Started on Tuesday, right? We see equity markets pulling back for most parts of last week, and it does look like any retracement higher does seem to identify a potential short short opportunities for the indices. All right, okay. So this is what we have on Dow Jones. All right, okay, and right, okay, we've come to the end of today's session. Right, so do take note of the links I've dropped in the chat box as well. You can catch Desmond's pre-market analysis as well. That covers all the analysis for the week on the daily time frame, and also you can catch this in trading the news interest rate decisions that we covered last week. And tomorrow, do look out for trading the news NFPs. All right. Thank you everyone for tuning in today. Hope this has been a great session for all of you. Okay, and before we round off, we just have to go through the disclaimer once more. We have the second disclaimer, which is the ending disclaimer. So do take note of the risk warning that comes with trading Forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Trading Forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risks involved and seek independent advice if necessary. Alright? Alright, thank you everyone for tuning in today, and do look out for tomorrow's webinar, and please register for it as well. Alright, take care everyone, have a great trading week, and I'll hope to see all of you tomorrow. Alright, thank you. Bye bye.